So now to the development land sector of the market. 2014 saw a huge amount of development land being traded right around the country. We saw a record volume of sales, over 116 individual transactions, totaling over 674 million, which is more than 3 times the volume traded in the previous 12 months. Much of the demand for land was driven by a scarcity, particularly in the Dublin housing market and the Dublin office sector. We saw land values increasing on the back of that. So what will 2015 bring? The likelihood is that we're going to see an increased volume of land being traded, with continued deleveraging from NAMA and the various banks. What we don't know at this juncture, if any major land banks will be brought to the market, as we saw with Project Cherry last year. Other than that very large land transaction, much of what traded in 2014 comprised relatively small parcels of land. But there is certainly a growing appetite for larger land banks, so it remains to be seen if they will come to the market and be traded this year. As rents and capital values have increased over the last 12 months, the feasibility of development has been improving all of the time, and that will continue to be the case over the course of the next 12 months. However, there are clouds on the horizon in the development sector. There's still a lot of uncertainty, particularly around the area of the central bank proposals on mortgage lending, the introduction of the Planning Act, which will see the introduction of a vacant site levy, and significant changes to existing social and affordable housing provisions. This uncertainty really needs to be cleared up to give developers the comfort to go on site and start developing the much needed accommodation, particularly in the Dublin housing sector and in the Dublin office market. The provision of funding is another issue. While there is funding available from private equity providers, we really need the traditional banks to start providing working capital to enable development to commence at the pace needed over the next 12 months. So all in all, a very, very busy year is expected. A lot of deleveraging will happen. And just as we've seen in many other sectors of the market, we expect to see an increase in the volume of secondary trades of land that was purchased as part of loan books and asset portfolios over the last number of years.